agreement goes, it was about no shot being fired. So no shots were actually fired across the border,
right.
or no missiles were fired.
Right.
Drones also didn't use their offensive weapons. So it's all right. They were trying to find out whether we have let down our guard because of the ceasefire, or whether we are still maintaining a high alert, because I think the anti-aircraft guns went into operation and shot down many of these drones.
Absolutely.
Yesterday night out.
Right. Ambassador Dasgupta, also please help explain to our viewers, there seems to be diplomatically a distinction between a ceasefire, a pause in hostilities and cessation of firing. India is not calling it a ceasefire just as yet. We are calling it a pause in our attack on Pakistan. What does this tell us, sir?
A ceasefire, once you have a declaration of war, of hostilities, and then you have something which is, signed and sealed, and that is a ceasefire. But the ceasefire may last, for an indefinite period. It may be there for only a short period, 7 days or something, to cover a festival or an important event, etc. In this case, the ceasefire is something which, the details of which are not very clear. But the Indian Army has made it clear, and the Prime Minister, of course, was very forthright in his speech, that Operation Sindoor has not ended. It is continuing.
Right.
You, indulge in terror activities, we will respond. So it will be a part of the Operation Sindoor.
Got it. Ambassador Dasgupta, I also want to draw your attention to something that perhaps was missing from Prime Minister Modi's address yesterday, and that was about the role that the US had potentially and arguably played in what US calls the ceasefire, and India is just calling it a pause in hostilities. Before you answer that, let's listen in to what Donald Trump said just a few hours before Prime Minister Modi went on air with his address.
We helped a lot. And we helped also with trade. I said, come on, we're going to do a lot of trade with you guys. Let's stop it. Let's stop it. If you stop it, we're doing trade. If you don't stop it, we're not going to do any trade. People have never really used trade the way I used it. That I can tell you. And all of a sudden they said, I think we're going to stop. And they have. And they did it for a lot of reasons, but trade is a big one. We're going to do a lot of trade with Pakistan. We're going to do a lot of trade with India. We're negotiating with India right now. We're going to be soon negotiating with Pakistan. And we stopped the nuclear conflict. I think it could have been a bad nuclear war.
Ambassador Dasgupta, does Donald Trump require a reality check, or does he need a fact check? Because he's also been a loudmouth talking about how this problem between India and Pakistan over Kashmir is centuries old. At times he has said it's 1,000 years old, 1,500 years old. Is he not read in? Does he not understand the severity? And does he believe that anything can be a deal and can be worked out with trade?
I think you have to give some concessions to President Trump for what he says, because he doesn't always know what he's saying, and two, he doesn't mean what he's saying in full. So to that extent, I think we have to discount some of the things which he says. As far as trade is concerned, Pakistan has a total exports of only about $30 billion and an import bill of $56 billion. Per annum. That was in the previous financial year. So even if you hold out the carrot of increased trade, Pakistan, apart from textiles and clothing and perhaps leather and a few other items, it is not a major exporter. So even if you hold out this carrot, this reward that we will give you more trade, it is not going to take place.
Absolutely.
Pakistan doesn't have the capacity to do it. So I don't think this, President Trump has got into the habit since January of, using trade as a huge strategic weapon. But that is not going to work. And that has shown up in the deal that the US struck with China.
Absolutely.
From 145%, they have come down to 30%. And of course, China continues with what it is doing. But
So
it is said that
hold your thought there, Ambassador Dasgupta. I think for our viewers, let's just bring them up to speed with the US and China trade deal. And in a major development, US and China have agreed to slash their steep tariffs on each other for the next 90 days, easing tensions that had rattled global markets and triggered fears of a worldwide recession. Now, as part of the temporary truce, the US will not roll back its tariff on Chinese imports from a staggering 145%. Now it will be down to 30%, while China will reduce its duties on American goods from 125% to just 10%. But despite the breakthrough, uncertainty still looms over whether a lasting deal can be reached or not. Let's just listen in to what Scott Bessent, the US Treasury Secretary, had to say first.
We have reached an agreement on a 90-day pause and substantially move down the tariff levels. Both sides on the reciprocal tariffs will move their tariffs down 115%. We had very robust discussions. Both sides showed great respect. The consensus from both delegations this weekend is neither side wants a decoupling. And what had occurred with these very high tariffs, as Ambassador Greer said, was the equivalent of an embargo, and neither side wants that. We do want trade. We want more balanced trade, and I think that both sides are committed to achieving that.
Yesterday, we achieved a total reset with China after productive talks in Geneva.
U.S. President Donald Trump touted his administration's agreement with China to slash tariffs on each other for 90 days, saying it was proof his aggressive strategy was paying dividends.
Think about it. We opened up our country to China. They have very few restrictions. And they didn't open their country to us. Never made sense to me. It's not fair. And they've agreed to open China, fully open China. And I think it's going to be fantastic for China. I think it's going to be fantastic for us.
The two sides said that under the temporary truce, the U.S. will cut extra tariffs it imposed on Chinese imports last month from 145% to 30% for the next 3 months, while Chinese duties on U.S. imports will fall to 10% from 125%.
We've gone from okay to apocalyptic to sort of merely bad.
Marcus Noland is the Executive Vice President and Director of Studies for the Peterson Institute for International Economics.
Where they were last week was absolutely apocalyptic. It would have resulted in supply chain disruptions that would have been something like the pandemic. There would have effectively been no trade between the United States and China. So a tariff of 30% is a high tariff, but it's a tariff that at least has a certain degree of flexibility and will allow life to go on, albeit at higher prices and maybe with greater uncertainty and delays.
Financial markets cheered the reprieve in a conflict that had brought nearly $600 billion in two-way trade to a standstill, disrupting supply chains and triggering layoffs. Shipping industry representatives said many companies may restart loadings of goods to get shipments in while tariffs were still low. But the uncertainty around any eventual deal may leave businesses wary of ramping up orders dramatically. U.S. Treasury Secretary Scott Bessent, who led the weekend talks with China, said the next meeting had not yet been set, but that the sides were ready to continue negotiating.
All right, Ambassador Jayant Dasgupta continues to be with us. Ambassador Jayant Dasgupta, former Indian ambassador to the WTO. So help us understand this in context. India was touted to be the first country to make a trade deal with the US, but guess what? China seems to be beating us and UK has also already beaten us. Where does this leave things now? US and China deciding to work together, negotiating and agreeing on lower tariffs.
Well, I would like to mention 2-3 things to put it in perspective. The US lowered its tariffs from 145% to 30%, which is a reduction of 115%.
Right.
China reduced it from 125 to 10%, which is again a reduction of 115%. So they have done what they wanted to do. The second point I wanted to mention is that China's MFN tariffs, if you take an average, is less than 10%.
Okay.
You know, for industrial products which account for about 93% of the trade globally, it is about 7-8%. And for agriculture, it is slightly higher, but the average comes to less than 10%. So China is still maintaining higher tariffs for the US than for the rest of the world. That is point one. Number two, President Trump had retaliated against China by imposing tariffs on a variety of items, including steel and aluminum, during his first stint between 2016 and 20. China, just one measure, they stopped buying soybean from the US.
Right.
And that caused prices to crash. The soybean farmers were in deep distress. And President Trump had to sanction $28 billion worth of subsidies for soybean farmers. So that is the kind of thing which he has been doing, and he doesn't learn lessons from the past or from economics.
Right. Well, let's leave it at that this morning. Ambassador Das Gupta, thank you so much, sir, for taking the time and joining us here on News 9. Thank you so much for your inputs.
Thank you. Pleasure.
Well, with that, we will slip into a very short break right here on Morning Brief at 9. But coming up on the other side, we started the show by asking whether Indian markets will continue to be in top gear or will we see a reversal. Well, it seems that neutral is the gear that Indian stock markets have chosen today as markets have opened flat. Amrish Baliga will be joining us after this very short break to help us make sense of what our trading and investment strategy from here on should be. You're watching Morning Brief at 9.
Beyond better, the new Tiguan R-Line. Volkswagen.
What is to the nines? In literal terms, it's perfection. But to us, it's not just a phrase, it's an attitude. One that starts at your desk and sends a statement to the world. To the nines is about taking charge. It's a way of life where every scene, every fold, is crafted with excellence. It's timeless elegance and uncompromising quality made for the corner office. It's the ideas that inspire redefining order and elevating the tabletop. To the nines, for the leaders of today and the visionaries of tomorrow.
Welcome back. You are watching Morning Brief at 9. Well, yesterday, Monday, saw the historic rally of Sensex and Nifty really doing a 4-year high in terms of a single day gain. In fact, the Sensex was up almost 3,000 points in trade yesterday, and the Nifty 50 was up more than 900 points. Well, things seem to be a little flat this morning. Look at Sensex and Nifty, both pretty much doing a flat trade. Sensex is now at below 82,000 levels. Nifty 50 is down to about 24,800 or so. Let's look at the Nifty 50 heat map and try and make sense of where the pain seems to be coming from this morning. And well, it seems to be fairly painful because the IT sector, despite the massive gains we saw in NASDAQ yesterday, and we'll tell you all about that later on the show, despite the gains in NASDAQ, Infosys is down more than 2%, HCL Tech is down more than 1%, Wipro meanwhile is down about 1.7% in early trade, TCS also taking a bit of a beating. The banking sector, which saw massive gains yesterday, is again on some sort of a course correction, it seems, with HDFC Bank, ICICI Bank, Kotak all in the negative territory. Meanwhile, Reliance is pretty much flat today. Yesterday, on the back of rising oil prices, we saw the Reliance share was also up about 3% or so in early trade. It's down this morning by about 1/3 of a percentage point. Well, very few green shoots. The only correction upwards that we are seeing is in the pharma sector after Sun Pharma, Cipla, Dr. Reddy's were all registering some shades of red. This morning, it seems to be a slightly better start. Well, that's the view right now coming in. But remember, markets seem to be volatile and things could change either way. Helping us put all this in perspective this morning is Mr. Amrish Baliga, an independent market expert. Mr. Baliga, good morning. Thank you so much for taking the time and joining us here on Morning Brief at night. Help us understand, sir, the impact of US-China reaching a trade deal has not really reached Indian markets. What seems to be holding us back?
Good morning. In fact, US-China reaching a trade deal, I think, is positive for global markets. And to a certain extent, I think it is also positive for the Indian markets. Because if the China trade deal had not happened, there was always a fear of dumping of goods across the globe, other than US. And that would have spoiled the market for India. So I think to a certain extent, that's positive.
All right. And I want to specifically talk about yesterday's rally, Mr. Baliga. And yesterday we saw some sort of a historic rally which we hadn't seen since 2021 or so. Sensex up almost 3,000 points, Nifty 50 up more than 900 points. Was it the perfect day to book profits and have those who have not done it lost the bus?
No, in fact, if you remember, I've been cautious for quite a while. But in the last 2 months, we got more or less fully invested because we saw the valuations at decent levels. Right. And now I can confidently say that possibly we have seen that bottom at 21,800, 22,000 levels. But what happened yesterday, I think, was a bit of an overreaction to the ceasefire. We had seen the markets correct about 400 points post announcement of Operation Sindoor. So a rally of 400, 500 points was something which was actually expected yesterday. But then a 900 plus sort of a rally was completely unexpected. So I think it was, like I said, it's a bit of an overreaction. So it's very much possible that we could see some correction. But like I said earlier, that I think that correction phase is over. What we should see going ahead is small corrections, consolidation, and then possibly a move up. Because if you look at the macro scenario, I think more or less most of the dark clouds are out. I think the last one was this war, which, hopefully now there should not be any further violations by Pakistan. And I think that should be positive for our markets going ahead. Because, like you look at the various things which are there, right from the earnings. We have seen the Q4 earnings. Fortunately, the earnings were recalibrated by the analysts earlier, so the expectations were low. Compared to that, we have seen better earnings. We have seen better macro numbers coming from the economy. Then we have had the US-UK trade agreement. We had the India-UK trade agreement. Hopefully, we should have the US-India trade agreement soon. Monsoons, again, are expected to be better than normal, so that's another positive. So if you look at the various data points, there is nothing really negative. So from here on, I don't expect a major correction, and any corrections should be utilized to buy and build the portfolio for a longer term bull market.
All right. Well, this may be an opportunity to buy and no further likely corrections. I want to bring the context of US markets yesterday. And usually, Mr. Baliga, we've seen, like you mentioned, US and China working together, maybe not great news for India, but the fact is that usually the ripple effect and the knock-on effect on the Indian IT sector every time US markets go up is fairly comparable. And this time around, we are seeing some sort of a reverse and an inverse relationship where, look at the NASDAQ, and this is what we have on the screen right now. Stocks of Microsoft up 2.5%, Apple and Nvidia up more than 5%. Yet we have a scenario where Indian IT sector has been bleeding this morning. So what seems to be this divergence today? I understand overall for the Indian markets, US and China working together, not the best of scenario that India would have wanted until India strikes a deal with the US. But the fact is that there has to be some ripple effect which we see missing today in India's IT stocks, sir.
No, IT stocks had moved up yesterday. When we had that 900 plus point rally, we had the IT stocks moving up.
Right.
Moving up again today based on NASDAQ would have been a bit too much. So I think there is some correction happening because of the sort of move which we saw yesterday. And at the same time, the sort of fear which was there earlier for the IT stocks, especially looking at the possible recession or a slowdown in US, I think that is slowly going away. So one need not be negative on the IT stocks, but even at this point of time, I would be slightly cautious. I'll not really go out and start buying IT. I would possibly wait for some correction. But again, like I said, just like the overall market, I'm not negative on IT. I would be a bit cautious.
All right, not negative on IT, albeit a little bit cautious. Well, I also want to draw your attention, Mr. Baliga, to something important that came in yesterday, because India yesterday proposed to impose retaliatory duties under the WTO norms against the US over aluminium, steel and aluminium tariffs that US has imposed. And India has said that this is in the name of safeguard measures. Now, safeguard measures are likely to impact as much as $7.6 billion worth of India's exports to the US and the relevant products originating from India, on which the total duty that would be collected by the US would be close to $2 billion. Now, accordingly, India has proposed that it would suspend the concessions that it is offering the US, and an equivalent amount of duty would be collected on products that originate from America. So, help us understand, sir, what does this mean for India's steel and aluminium sector, metal stocks per se, and parallelly, does it make sense for India to actually have these retaliatory tariffs simply because India hardly imports any steel and aluminium from the US?
No, that's true. But then, see, overall, because of this, it can have a negative impact on the ongoing trade treaty which is being talked about. Okay. That can get a bit delayed. I think, the reaction to this could be a bit of a delay in the trade treaty which we've been talking about. Like you rightly said, we should have been among the first to get it signed. But then, already UK and China are more or less, ahead of us. So there can be further delay.
All right. Also talk to us, Mr. Baliga, how important are the trade negotiations which are on in New Delhi right now until May 16th, in which India and EU negotiators are talking to each other? We have stitched a deal with Switzerland, for example, which is an FTA relevant, until 2035. But India is also very keen to stitch up, in addition to the India-UK FTA, India is very keen to stitch up India-EU FTA as well. So, how important is trade with the EU bloc, and then specifically in the context of markets? How do markets view India and EU coming closer together, if at all those negotiations go through well?
No, I think it's an era where possibly we should have trade agreements with most of our, buying countries, where we are exporting. EU clearly is one of the major ones where we have exports going on. So I think from that point of view, it is extremely important. But I think most important would be the US-India treaty, which hopefully, like I said, should happen sooner than later. But because of these developments, yes, there can be a bit of a delay.
And what do you make of the fact that after US and China have both respectively announced that they are working closer together, why do you think there is pressure on the Hang Seng index? Why is the Hang Seng down 1.6%, 1.7% in early trade today? Because US, on the other hand, reacted very positively. Well, of course, we saw Shanghai Composite as well as Hang Seng register some gains yesterday. But why such a large correction in Hang Seng, with all other Asian stocks seem to be, and Asian indices seem to be in the green this morning, sir?
I think, it was clearly expected that post the announcement by Trump, we should have had the treaty out as of yesterday. But then even that has got a bit delayed. Maybe it can take another 2 or 3 days more. But looking at that, possibly we have seen that correction in Hang Seng.
All right. And also important inflation data in India domestically likely to come out this week. So inflation expected to be in line, which means the RBI will continue to cut interest rates. So have markets already factored that in? How many more rate cuts is market factoring in, given that US may still be quite some distance away for the US Fed to cut rates?
From an inflation perspective, in India inflation should be benign. So, I really don't expect it to be more than what RBI has been talking about. And based on that, clearly we are expecting at least another 50 to 75 basis points cut over the next 1 year, which is, I'm talking of financial year FY26. We should see at least another 2 or 3 rate cuts, like between 50 to 75 basis points.
All right, at least another 2 rate cuts. Well, meanwhile, Indian markets are deepening their cuts this morning. Nifty 50 Sensex both down sharply in trade today. Nifty 50 is down about 0.8%, now well below the 24,800 level. Sensex meanwhile is down about almost 500 points from yesterday, maybe more, in fact 81,538, more than a percentage correction in the Sensex. Volatility meanwhile has gone up a little. The fear index is up at about 18.46. Mr. Baliga, do you expect the day ahead to be choppy? Because this seems like there are major cuts coming in. At least that's what early signs suggest right now. Could this be, again, like you mentioned, there won't be massive corrections going forward, but are these corrections a good opportunity for investors to dig their teeth into?
Absolutely. Like I said, yesterday was a bit overdone. So a correction today would be, I would say that would be normal. And I'll not be surprised, even if it's a 200, 300 point correction today. And in case it deepens a bit, maybe if we see levels of closer to about 24,400, 500 over the next couple of days, I think that could be a buying opportunity. Because I really don't see the markets going too much below 23,800, 24,000 levels unless something really goes wrong again. Okay. So any sort of a correction should be a buying opportunity for long-term investors.
All right, any correction should be a long-term buying opportunity. Now, I want to specifically understand from you, Mr. Baliga, before I let you go, what seems to be driving this correction? Is this profit taking on account of the massive rally we saw yesterday? Or could this proportionately also mean that foreign investors are now looking at China and parking their money there rather than coming to India? Is this a retail investor-driven decline or correction that we are seeing today, or are there foreign investment factors at play here?
No, because if you see, FIs had turned buyers since the last fortnight or so. I don't think that's going to change so much overnight just because of the sort of a trade agreement which is happening with China. Because end of the day, they also look for opportunities, and the sort of opportunities which are there in India are more or less long term. So I think the FI buying will continue, no doubt. And today's correction, like I said, I think it's more of a normal sort of a correction because of the sort of a overdone rally which we saw yesterday. So it's normal profit booking because you have so many traders who would have bought in the last couple of days. I think it's a great opportunity for them to book out. Big traders, they are short term. So I think it's a great opportunity for them to book out. So that's exactly what's happening today.
Well, thank you so much, Mr. Amrish Baliga, independent market expert, for sharing your expert opinion here with us on News9. Pleasure having you with us this Tuesday morning. And before we slip into another short break, let's look at some of the global stories that we are tracking for you this morning. Like I told you, US and China agree to 90-day tariff rollback in bid to ease trade war tensions and calm global recession fears, but questions over a permanent deal still remain unanswered. Meanwhile, Wall Street has rallied as US and China agree to 90-day tariff truce. Dow Jones up about 3%, S&P 500 hits March high. Meanwhile, Nasdaq soars over 4% amid tech surge. US President Donald Trump signs executive order demanding drug makers cut US medicine prices to match international rates, threatens tariffs if companies fail to show progress within 6 months. And after much backlash, Donald Trump defends accepting Qatari Royal Jet as gift, citing Boeing delays on Air Force One, denies plans to use plane after his presidency runs out. Tech giant iPhone maker Apple considers raising prices for upcoming iPhone lineup, plans new features and design changes as stock jumps 7% amid U.S.-China tariff truce. OpenAI and Microsoft reportedly to renegotiate multi-billion-dollar partnership to enable future IPO, with talks focused on extending AI access beyond 2030 in exchange for potential equity adjustments. And on to Japan now. Automaker Nissan to slash over 10,000 more jobs as part of deepening global restructuring, bringing total cuts to 20,000 amid record projected loss and slumping sales in US as well as China. Fox to unveil Fox One subscription streaming service ahead of NFL season. Move marks a shift beyond cable TV, targeting a younger audience, moving to streaming. South Korea's presidential race kicks off as Lee Jae-myung and Kim Moon-soo-wi to lead a deeply divided nation still reeling from Yoon's ouster, with threats of violence, economic concerns and foreign policy challenges shaping the race. We'll bring you all these stories on the other side. You are watching Morning Brief at 9. Operation Sindoor. Precision, courage, sacrifice. India's finest on India's front line.
India is giving a strong response to Pakistan's provocations, shooting down 50 of their drones. Our air defense system has so far intercepted all the attacks made on it successfully.
India is now well within its right to be able to give a bigger and a better response to every single move of Pakistan.
Every move mission critical. Every heartbeat nation first. News9 salutes the Indian Armed Forces.
Armed forces are facing a situation like this, and they've really risen up to the occasion.
You are in the hands of a very, very professional military.
The BSF, the CRPF, the Army, the Navy, the Air Force, they are also answered in full measure and then some.
Unflinching, unmatched, unbreakable. News9, with those who serve, always. Welcome back. You're watching Morning Brief at 9. Let's bring you all the global stories that we're following this morning. US President Donald Trump has signed an executive order aimed at slashing prescription drug prices in the US. The order directs pharmaceutical companies to lower their prices to match what patients pay in other countries. Drug makers now have 30 days to meet new price targets, with the administration warning of further action, including tariffs, if significant progress isn't made within 6 months. Trump said that he's seeking price cuts between 59% and 90%. Listen in.
But starting today, the United States will no longer subsidize the health care of foreign countries, which is what we were doing. We're subsidizing others' health care, countries where they paid a small fraction of what, for the same drug, that what we pay many, many times more for. And will no longer tolerate profiteering and price gouging from Big Pharma. But again, it was really the countries that forced Big Pharma to do things that, frankly, I'm not sure they really felt comfortable doing. But they've gotten away with it, these countries. European Union has been brutal, brutal. When I worked so hard in the first term, and if I got prices down, remember I was the only one to ever get prices down for a full year, but I'd get them down like 2%, and I thought it was like a big deal. Well, we're getting them down 60, 70, 80, 90%, but actually more than that if you think about it in the way mathematically. And Pharma has to say, we're sorry, but we'll not be able to do this any longer to these countries that have been so tough.
And staying with Donald Trump, after facing much backlash from the Democrats, President Donald Trump justified his plans to accept an airplane costing as much as $400 million as a gift from the Qatari royal family, arguing that Boeing's delays in delivering a new Air Force One make it a practical decision. He also added that US has kept Qatar and other Gulf states safe and has no plans to fly the plane for personal reasons after he leaves office. Remember, this comes in the wake of Donald Trump's visit to Gulf countries this week.
Thought it was a great gesture, and I think it was a gesture because of the fact that we have helped and continue to. We will continue to all of those countries: Saudi Arabia, UAE, Qatar, and others. We keep them safe. If it wasn't for us, they probably wouldn't exist right now. And I think this was just a gesture of good faith. And I don't get it. Someday it'll be like Ronald Reagan. They decommission them. You know, they get to a certain age, they decommission them. It'll go to my library. They're talking about going to my library.
All right. Well, Apple is reportedly considering a price hike for its upcoming fall iPhone lineup, a move it plans to pair with new features and design updates, according to the Wall Street Journal. Now, the tech giant's shares surged as much as 7% in pre-market trading following the development. Now, this boost follows a broader market rally sparked by a temporary truce in US and China trade war, with both countries agreeing to reduce tariffs for the time being.
Apple is reportedly weighing price hikes for its upcoming fall iPhone lineup, but is keen to avoid linking any increases to US tariffs on imports from China, where most of its devices are assembled. That's according to the Wall Street Journal on Monday. The technology giant's shares were up 7% in pre-market trading. They tracked gains in the wider market after Washington and Beijing agreed to temporarily slash the reciprocal tariffs. But Chinese imports will still be subject to a 30% levy in the US. Apple is among the most prominent firms caught in the US-China trade tensions. The company did not immediately respond to a Reuters request for comment on the journal's report, which cited people familiar with the matter. Raising prices could help Apple cushion higher costs stemming from the tariffs that have hampered global supply chains and force the company to shift more production to India. Analysts have for months speculated about a price increase from Apple, but warned that such a move could cost it market share. The cheapest iPhone 16 model was launched in the US with a sticker price of $799.
All right, and staying with the technology sector, OpenAI, the ChatGPT maker, as well as Microsoft are now reportedly renegotiating their terms of the multi-billion-dollar partnership aiming to pave the way for a potential IPO by the ChatGPT maker OpenAI. Now, according to reports, the talks are focused on ensuring Microsoft retains long-term access to OpenAI's cutting-edge AI models even beyond their current 2030 agreement. Now, the reports also suggest that Microsoft may give up some of its equity stake in exchange for future access to the company's most advanced technology. Take a look.
OpenAI is talking to Microsoft about rewriting the terms of their multi-billion-dollar partnership. That's according to a report by the Financial Times on Sunday. It says the plan is to allow the ChatGPT maker to launch an IPO in the future while protecting Microsoft's access to cutting-edge AI models. One critical issue is how much equity the software giant will get in exchange for the more than $13 billion it has already ploughed into OpenAI. The report says Microsoft could give up some equity in return for access to new technology developed beyond a current 2030 cutoff. The pair are also said to be revising a wider contract first agreed when the Windows maker invested an initial $1 billion in OpenAI in 2019. There was no immediate comment on the report from either party. Tech publication The Information said last week that OpenAI has told investors it will share less revenue with its top backer as it moves ahead with restructuring. The firm has recently dialed back plans to become a for-profit company, instead leaving its non-profit parent organization in charge. In January, Microsoft changed some terms of a deal with OpenAI after it entered into a joint venture with Oracle and Japan's SoftBank to spend up to $500 billion developing new AI data centers in the US.
Japanese auto giant Nissan is scaling back in a big way. The company will slash over 10,000 more jobs worldwide, bringing total layoffs to about 20,000. That's 15% of its total workforce. Remember, the move is part of a massive restructuring effort amid declining sales. Take a look.
Nissan will slash more than 10,000 jobs. That was the report from Japanese broadcaster NHK on Monday. It would bring the total cuts, including previously announced layoffs, to about 20,000 or 15% of its workforce. The struggling Japanese automaker warned last month it would likely book a record net loss for the financial year that ended in March of up to just over $5 billion. It blamed impairment charges for the projected number. Nissan is due to announce its full-year results on Tuesday and declined to comment on the NHK report. The car maker wants to make its business leaner and more resilient after doing poorly in its top market, the US. Its performance suffered there from a lack of hybrids and an aging lineup. Nissan has also struggled in China, where it aims to launch some 10 new vehicles in the coming years to fight a steep sales drop. The firm had already looked to cut 9,000 jobs and reduce global capacity by a fifth as part of its restructuring plans. Its weak performance forced it to cut its profit outlook 4 times for the financial year that just ended.
America's Fox Corporation is marking a major digital push. It is launching a new subscription-based streaming service called Fox One, expected to go live before the American football season. The move marks a shift beyond cable TV, targeting a younger, cord-cutting audience. Here's more.
Fox Corporation announced on Monday that its new subscription-based streaming service will be called Fox One, as the media giant looks to grow its audience beyond its legacy broadcasting cable TV channels. The new streaming service, first announced in February, is set to launch before the start of the American football season in the fall. Football was also at the heart of the company's first quarter earnings results on Monday. Fox reported profit and revenue that beat Wall Street expectations thanks to a surge in ad revenue from its February broadcast of Super Bowl 59. More than 127 million viewers tuned into the game, the largest audience in TV history for a single network telecast, according to Nielsen. Advertisers paid as much as $8 million for a 30-second commercial spot. But when it comes to streaming services, Fox has largely sat on the sidelines, mostly betting on ad revenue from its free site, Tubi, which has about 97 million monthly active users. Growing the new Fox One service will be a bit of a balancing act for the media giant, which was founded by Rupert Murdoch and is now run by his son Lachlan. The younger Murdoch told analysts that pricing will be, quote, healthy, as Fox does not want to lose cable subscribers to the streaming service. Shares of Fox Corp jumped as much as almost 7% in Monday morning trading.
All right, and moving to Asia now. South Korea's race for presidency is officially underway. Top contenders are promising to bridge political divides and revive the economy of a country polarized over former President Yoon Suk-yeol's use of martial law and his eventual ouster. Campaigns kicked off this morning, setting the stage for a closely watched election. More details in this report.
Contenders for South Korea's presidency kicked off their campaigns Monday. It is a race to determine the successor to former leader Yoon Suk-yeol, who was ousted after briefly declaring martial law and plunging the country into political crisis. Top of the agenda for any candidate is uniting a fractured country in the wake of Yoon's removal from office and trying to grow the economy under threat of Donald Trump's trade policies. The frontrunner is Lee Jae-myung of the Liberal Democratic Party. Lee lost to Yoon in the last election, but is now gaining strong support.
Inequality, polarization, and insurrection have driven our society into extreme division and conflict, to the point where a presidential candidate should wear a bulletproof vest at election campaigns.
Lee was wearing such a vest on Monday over threats to his safety. He also survived a knife attack last year and has ridden a wave of popular appeal after that incident, as well as standing up to martial law and contesting charges that threatened to disqualify him. Those trials on charges of bribery and others linked to a property scandal have been postponed until after the polls. His party's policy pledges include mending fractured ties with North Korea and forging stronger ties with Europe. Lee's rival is Kim Moon-soo of the right-wing People Power Party. He began his campaign at a Seoul market, eating Korean sausage soup with merchants there and promising to revive small businesses.
Standing here at a public wholesale market, I truly feel I need to become the president of the markets, a president for people's livelihoods, a president for the economy. I think I should become a president who brings prosperity to South Korea.
Yoon backed Kim on Sunday to fight what he called the giant opposition party but that's drawn criticism from PPP members who want Yoon kicked out of their party. If elected, Kim has proposed an immediate summit meeting with Trump to negotiate tariffs. Kim has also said he'd explore the possibility of South Korea developing nuclear arms by securing the right to reprocess nuclear fuel, a big step toward building atomic weapons.
All right, and before we end, well, we did start the show by asking the question whether markets are going to continue their top gear run of yesterday or will they slip into reverse. Well, remember, markets started on neutral and they have sharply slipped into reverse gear this morning. Sensex and Nifty are both down close to Nifty 50 down about 0.7%, Sensex down about 0.9%. Well, there seems to be deeper cuts expected today. Let's quickly look at the Nifty 50 heat map, which is looking mostly red this morning. Massive cuts coming on the IT front, massive cuts coming even in the banking sector. HDFC, ICICI Bank, both now below 1% in trade. TCS, Infosys, HCL Tech, Wipro, all registering a deep shade of maroon. That's the mood of the markets. We will keep an eye on it for you and bring you all the updates as and when they break. Well, with that, we will end this edition of Morning Brief at 9. See you tomorrow. Thank you so much for watching.
Warfare redefined.
Pakistan has not only been exposed, their narrative that their air force is superior than ours, that narrative has been shattered.
Nature of warfare has changed drastically.
Misinformation campaign of Pakistan over the past 48 to 72 hours.
We are capable enough to thwart every attempt that is being made to attack the civilians, to attack our air forces.